Hey everyone, so in this video we're going to discuss some pattern recognition, how to use technical analysis and what some different patterns are, what the difference is between a pattern and a trend. So first of all, we'll start with, I'm just going to use Apple here as I know there's a few examples. So taking a look back to Friday. So on Friday, you can see here we pulled back significantly from the open. So we're taking a look at what a bear flag is in this example. So a bear flag is essentially you have your pull from the pullback and you have your flag, which is generally no more than 33% of a pullback. Anything over that, you tend to negate the bear flag. So you can see here, it just resembles a pull, which the retracement cannot be any more than 33%. So I'll show you an example here in just a moment on how to gauge that. But as you can see, you got the pull here and then the flag at the top, and that is a bear flag. Generally that means, and then you can expect to see about the same amount of pullback. So you would measure it here from the high, which is right around there, and we pretty much confirmed that bear flag perfectly. So you just take the pull from the way down and you place it at the top, and that same drop can be expected. Generally, you don't see it happen perfectly. So it's just the ideology is there and the psychology of that pattern. So taking a look at Apple on the 4 hour, we also had a 4 hour bear flag on Friday. So you can see here, just taking a look, going back, so 4 hours, I went real back. So you can see here on Friday, we had a 4 hour bear flag. So you're starting to see a flag pull pattern. And that's exactly what happened is we broke bearish. So you can see here, the pull was this right here. So if we move it down, that one actually exceeded the typical bear flag measured move. But as you can see, we just start to form these candles where it's a diagonal slope and it just resembles a flag, right? And a flag pull. So we'll take a look at the flip side. We'll see if we can find a bull flag. So a bull flag is just the opposite of that. So it's whenever you see some brief consolidation, and I'm not seeing any here on the 5 minute, but you see some brief consolidation from a strong move up and then a break to the upside. So here would be a bull flag right here. So you can see we had the move up, or you can guess you can use it from there to there. And then you can see it confirmed perfectly. So we had the pull and then we had the pullback, which is your diagonal consolidation. Ideally, it shouldn't happen any more than 3 or 4 candles. If it doesn't play out by then, it's probably not going to happen. And like I said, you just measure the pull from there to there, and it gives you an idea of where it's going to bounce. And in that example, it worked out perfectly. And we'll take a look at the US dollar. So we have what's called a monthly inverse head and shoulders, which was forming. So an monthly inverse head and shoulders is essentially, as it sounds, you have your left shoulder, your head, and then your right shoulder, and it's inverted. You've got your neckline here at the 100 level. So just basically means that these patterns tend to break to the upside, and we can see some more upside continuation on those names. And just the reverse of that, you can even just literally invert this chart and you'd see this would be a head and shoulders. So if this wasn't inverted, you'd see it like this, and that would be a head and shoulders, and that's a bearish pattern. So inverse head and shoulders is bullish, and a regular head and shoulders pattern is bearish, and we tend to see some more downside from those types of moves. There's also cup and handles, which see if I can just find one here really quickly. So We had another monthly inverse head and shoulders here. You can see that forming back here. It failed to break though. And in that scenario, it didn't work out to our benefit. And not seeing any. So yeah, here's a cup and handle. So essentially, a cup and handle is, as it sounds, it's just a U-shaped cup, and you generally want to see a bull flag, and that's what happened. Is we formed that round bottom, we formed a cup and handle, and then we pulled back and consolidated. We created that bull flag that I just talked about, which is a bullish continuation pattern, and then that also confirmed the cup and handle, which generally those break to the upside like so. Other than that, there's a ton of different patterns that you can watch. There's falling wedges, which tend to break to the upside. There's rising wedges, which tend to break to the downside. A good example of that would be U.S. oil. So taking a look at U.S. oil on the daily. Oops. So you can see here. Just one sec here. This is inverted again. There we go. So you can see oil was forming a rising wedge on the daily. And you just draw that using the real bodies of the candles. So you just draw it something like that. So you can see here, it's a wedge, it's rising. So as you get as it trends higher and higher, you start to see it respecting this channel. And when it breaks to the upside, obviously that pattern can be negated. But in this instance, we weren't seeing any follow through. So we were breaking to higher highs and remaining in an uptrend, but we weren't seeing any follow through. So when you're breaking to higher highs with not much follow through, it means to scout a potential rising wedge, and those tend to break bearish. So in this example, that's exactly what happened. Is we bounced around that wedge and we broke bearish. And that was actually one of our major signals as to why the stock sell-off happened. And then conversely, it would just be a falling wedge would just be the opposite of that. So pretend that this was a stock that was trending down. You just start to see lower highs and lower lows without much follow through, and then a break to the upside. But because that's just inverted, it's a rising wedge, not a falling wedge. Other than that, there's a ton of different patterns and indicators that we can use. We have RSI, which is your indicator for overbought and oversold, your relative strength index. So you can see here, while oil was trending to higher highs on the price was trending up, but the RSI was trending down. So that should give you a little bit of a heads up that you want to see RSI trending up as well to higher highs and higher lows. And as you can see, that bearish divergence on the RSI compared to the price level was a nice indication as well that we were probably going to break to the downside. So what clues did we have that oil was going to break down? Well, first we were seeing breakouts to new highs without much follow through, red flag number 1. We had a rising wedge on the daily, which broke bearish, red flag number 2. And we had the RSI trending down while the price was trending up, which is a red flag number 3. And that would have given you a ton of information and early signals on some potential pullback in oil and stocks, as well as it seems that equities tend to follow oil, and definitely leading the move to the downside. You can see we're super oversold on the daily. So when we hit 30 or below, we're considered oversold. If we hit 70 or above, it's considered overbought. And you can see here we're sitting at 23.56. It actually would have went down to about 20 on this drop, because you can see here we hit a low of 36. So yeah, that would have been at about 20. So generally you want to buy when things are oversold and sell when they're overbought. Just as an example, we'll take a look at SPY. I'll just bring it up here on this chart here. So taking a look at SPY, we also have monthly, we had the monthly chart give some signals. You can see here we had this resistance line sloping up and this resistance line support line sloping down, which is called a megaphone pattern, where you start to see some more exaggerated moves but still respecting that megaphone support and resistance. So generally, you could potentially see this happen again if that megaphone continues to play out. What I would expect on SPY, the S&P 500 ETF, is to set a potential lower high or higher low here around these EMA 12 and 26 support. So you can see 297 and 313 and 300 about right in the middle. And that's a nice round psychological number. A lot of people would probably look to play off of a 300 test, as that is an important psychological level. So what I would like to see is a potential higher low and a higher high. And then that will give us confirmation that any breaks to new highs are healthier. If we just keep breaking up, then that's why we start to see these huge sell-offs like we did in the market in the last day or two. And potentially what we could see is also a lower high and lower low, and then that would change the monthly trend. So, and look at here on SPY, when SPY was trending up, the price was trending higher, but this RSI has been trending lower and higher lows and lower highs and lower lows. So another indication that that was going to happen. We also have Bollinger Bands, which are these this cloud channel here. So you can see here we have the top of the bands, the bottom of the bands. Anytime we've been outside of the monthly Bollinger Bands, it's never ended well, and we've always came back within that range. And you can see here we were well outside of SPY, and that was another reason why I expected a sell-off, not just oil and the rising wedge there, but also because of SPY. And now we're well within the bands again. So I wouldn't be surprised if we tested the 313 level over time. Do I think the end is over for stocks? No, I think we will test potentially new highs. But again, just taking it day by day, we'll have to see how everything plays out. But just to give you a brief overview of how a trend works. So in order to see an uptrend, we need to see a higher low and higher high. In order to see a downtrend, we need to see a lower high and lower low. So we'll give you an example. So here on the weekly chart, you can see here we had our high, our low. So we broke the low of the previous candle. That's a higher low, and then a higher high. So right there, we changed the weekly trend bullish. We also formed another higher low here and higher high. So once we broke that, we were still in a weekly uptrend, but that is now our most important higher low. We did form a little bit of a higher low here as well, and we're still looking to form a weekly higher low. And given the size of the pullback, especially on the daily, we'll look for a lower high. So how do you form a downtrend? Well, it's the exact opposite. So if we pull back here and set a lower high, so if we break the high of the previous candle and then we break the low, that would be a confirmed downtrend. So just it'll definitely take some time to get used to. We also have the EMAs, which are support exponential moving averages. So you can see here on the daily, when these crossed, whenever the short-term one, the 12 period crossed through the 26, that's generally a bullish sign, and you want to buy it. So when stocks pulled back here and held that as support, that would have been a good buy signal, because we had the price crossing and it held support, and you'd have been laughing. You would have never been stopped out if you used that as your stop, and you could have made potential 30% on that run up. So again, now it looks like the EMAs could potentially be crossing bearish. So when the short term crosses through the long term, the opposite. So back here, the short term crossed through the long term on the way up. Now it's crossing down short term through the long term. So that could be bearish. So if this does follow through, we could test down here at the 320 level, which I wouldn't be surprised in the slightest. What else do we have to cover? Yeah, that's pretty much it for now. That's quite a bit to digest. So if you do have any questions or comments, please leave them in the comments below. Let me know if you need me to elaborate on anything else a little bit more in depth. If there's any tickers or anything you want covered in specifically, just let me know. Hopefully that helps and has been educational for you folks. And we'll see you on the next video. Have a great day.